December 2008. Bernie Madoff calls his two sons into his office and says 4 words that end everything. It's all just one big lie. $65 billion gone in an instant. But this fraud didn't happen overnight. It took Bernie Madoff 20 years and half of Wall Street to build. Rewind to 1960. A young Bernie Madoff starts a small trading firm with $5,000 he saved from lifeguarding and installing sprinklers. Nobody on Wall Street takes him seriously yet. Over the next 2 decades, Madoff builds something real. His firm becomes a pioneer in electronic trading, one of the first to use computers to match buy and sell orders. By the 1990s, he's chairman of the NASDAQ stock exchange itself. Part of Madoff's magic is who he is. He's a respected figure at country clubs and Jewish charity boards, the kind of man people trust with their life savings without asking too many questions. Investors nickname his fund the Jewish Bond for how safe it feels. But there's a second business tucked away on a locked floor. A private investment advisory arm, small and secretive, open only to those who ask the right people. Only a handful of employees even know it exists. The pitch is simple: steady returns year after year, around 10 to 12%, rain or shine. Even when the market crashes, Madoff's numbers never do. Investors call it magic. It feels less like an investment and more like a guarantee. In 2001, a financial magazine publishes an article asking a blunt question. How does Madoff always win, no matter what the market does? Wall Street shrugs it off. His reputation is simply too big to doubt. Here's the truth hiding underneath. There is no real trading. New investors' money doesn't get invested. It simply pays off the older investors, disguised as profit. It's a Ponzi scheme, dressed up in a 3-piece suit. To sound legitimate, Madoff describes a complex options strategy called split strike conversion. It sounds sophisticated enough that almost nobody dares question it out loud. And it's exclusive. You can't just walk in and invest. You need an introduction, a country club connection, a friend of a friend. Being turned away only makes people want in more. Behind the scenes, a small back-office team manually types up fake trade confirmations on outdated computers, statements showing trades that never happened, printed to look perfectly real. Some of these fictional trades even use real historical prices, pulled from old newspapers, to make the paperwork bulletproof. One giant red flag hides in plain sight. The firm managing tens of billions of dollars is audited by a tiny accounting office above a strip mall, just 3 people, one of them semi-retired. Nobody at the SEC ever bothers to check who actually signs off on the numbers. Regulators actually look into Madoff more than once. The Securities and Exchange Commission investigates him several times over the years, and each time they walk away and clear him. One man refuses to buy it. Financial analyst Harry Markopolos runs the numbers in under 5 minutes and knows immediately this is mathematically impossible. He writes to the SEC again and again and again. For 9 years, nobody listens. Meanwhile, the money keeps pouring in. Feeder funds funnel billions from Europe, Latin America, and Asia straight into Madoff's accounts. Charities, retirees, and celebrities all want a piece of the magic. Madoff's sons and brother run the legitimate trading floor upstairs, completely separate from the secretive advisory business downstairs. To this day, how much they really knew remains one of the case's biggest questions. And Madoff lives the part. A penthouse in Manhattan, a yacht named Bull, mansions in Palm Beach and the French Riviera. To everyone watching, success like that has to be built on something real. By the 2000s, Madoff's client list reads like a who's who. Hollywood names, Nobel laureates, university endowments, and the charitable foundation of Holocaust survivor Elie Wiesel. If people this careful trust him, why would anyone else question it? Then, in 2008, the financial crisis hits the whole world at once. Panicked investors everywhere need cash, and they start asking Madoff for their money back. All $7 billion of it. For the first time, more money is leaving than coming in. But the math has never worked. There's no 7 billion sitting in a vault. There's barely enough new money coming in to cover the last withdrawal, let alone this one. On December 10th, cornered with nowhere left to turn, Madoff finally tells his sons everything. The firm, the returns, the strategy, all of it has been a lie since the very beginning. His own sons walk straight to the FBI. The next morning, agents arrive at Madoff's apartment. He doesn't deny a thing. He's arrested on the spot. When investigators finally add it all up, the number is almost impossible to believe. $65 billion in fake account balances, the largest Ponzi scheme in history by far. Behind that number are real people. Retirees who lost every dollar they'd saved. Charities that shut their doors overnight. One investor, a European fund manager, takes his own life within days of the news. In March 2009, Madoff pleads guilty to 11 federal felony charges. He stands in court and simply says, "I knew what I was doing was wrong, indeed criminal." The judge sentences him to 150 years in prison. The fallout tears his own family apart. 2 years later, his son Mark, unable to live with the shame, takes his own life on the anniversary of his father's arrest. For over a decade afterward, a court-appointed trustee works to claw back what's left, tracking down Madoff's assets and eventually recovering more than $14 billion for victims. So how did it fool everyone for 20 years? Not one trick, but 3. A spotless reputation nobody wanted to question, regulators who didn't do their homework, and investors who mistook steady returns for safety instead of the biggest warning sign of all. Madoff died in prison in 2021, still serving that 150-year sentence. His name changed how regulators watch investment firms, but the lesson is older than that. If a return never goes down, ask why. It's a reminder that even the most trusted names deserve real scrutiny. This is just one collapse in a long history of empires built on lies. Subscribe to see how the next one fell.